Good morning, guys. Welcome to my channel, Learn Accountancy with Prasad R. So today we will be discussing about the treatment of goodwill at the time of admission of a partner. Clear, guys? So before starting the discussion, let us first understand what is what is a goodwill. So what do you know? What do you understand by goodwill, guys? What do you understand by goodwill? When a new partner, see, the treatment of goodwill is very important whenever there is an admission of a partner, or whenever there is a retirement of a partner, whenever there is death of a partner, or whenever there is change in profit sharing ratio. In all these circumstances, we have to pass few entries for the treatment of goodwill. Okay, so why is goodwill important at the time of admission of a partner? When a new partner joins a business, the existing partners already they would have created a business, right? So when they would have created a business, they would have worked hard for several years to create and establish a business. They will be having their own clientele. So when a new partner joins the old firm, so from day one itself, he can enjoy the benefits or he can enjoy the hard work which is created by the old partners. So he doesn't have to start from the scratch. So what will be the old partners expecting from the new partner? The old partners will be expecting a share of compensation, a share of compensation from the new partners. This share of compensation or the goodwill that the old partners have created in the market, or the clientele that the old partner has got, or the name that the old partners has got in the market, that is called as goodwill. Clear, guys? So first let us understand the definition of goodwill. What is goodwill? Goodwill is an intangible assets. So goodwill is an intangible asset. What does it represent? It represents the firm's reputation in the market. Firm's reputation in the market. Clear? It represents the firm's reputation in the market. Okay. And what creates this goodwill? It can be a customer loyalty. It can be the quality of products or services that the partnership is delivering. It can be the location. It can be the efficiency. Okay. So now let us understand from an accounting point of view. From an accounting point of view, what happens when a new partner is admitted? What should be the treatment of goodwill? We should understand. So when a new partner joins, what happens? The existing partner they sacrifice a portion. For example, see, take a simple example like if you are having a dairy milk in your hand and two friends at this moment. So what you will do, you will share the dairy milk 50-50 between two of you. Now suddenly a third friend arrives. When you are just opening the dairy milk, a third friend arrives in your home. So what will you do? The same dairy milk now will have to be shared between three friends. So the portion that the previously the old friends that the two friends that they were at home, that share that they will be getting will now be reduced actually, because some portion of that share has to go to the new friend who just came for visit. Okay, so this is called as sacrificing ratio. This is called as sacrificing ratio. Previously, the profits were 100. It was divided between A and B. So each will get, assuming the profit sharing ratio is equal. Okay, so each will get how much? 50 and 50. Now the same 100 rupees after addition of C. If the profit sharing ratio is equal, every partner will get one third, and one third. Okay. So previously A and B, they were enjoying how much? 1 by 2 and 1 by 2, assuming their profit sharing ratios were equal. Now when A, B, and C comes, each will get how much? One third. This guy will also get one third, and this guy will also get one third. C will also get one third share. Okay. So the share will change from one half, which is equivalent to 50, One third means 33.33. Okay, so the share will reduce. Okay, but we don't mention in decimal. We always mention the ratios in fraction. Okay. Now let us understand. See, there are two things actually. One is the new partner will bring goodwill in cash. Okay. Another case is the partner will not bring goodwill in cash. Okay. So what we shall do in such case, when the partner bring goodwill in cash, when the partner is not able to bring goodwill in cash. See, always remember, in case of admission, goodwill will be distributed to the sacrificing partner in the sacrificing ratio. It will be always distributed in which ratio? In the sacrificing ratio. Okay. Let us take an journal entry. I will come back to the cases later. Let us talk about the journal entry. Okay. We are discussing about the case where goodwill is brought in cash. See, the first entry when a partner brings goodwill in cash, entry will be cash account debit to premium on goodwill. Let us assume this is 50,000 and 50,000. Okay. When a partner brings goodwill in cash. Now, entry for this will be cash account debit to premium on goodwill, cash account debit to premium on goodwill. And the second entry will be this premium on goodwill will be now given to the sacrificing partner. Let us take an example of A and B are old partners. C has been admitted for an equal share. Okay. So when C is admitted, so C is bringing 50,000 as goodwill. Now this 50,000 goodwill will be distributed to whom? It will be distributed to the 50,000 goodwill will be distributed to A and B. It will be distributed to A and B. In which ratio? In the sacrificing ratio. For a moment, let's understand that the sacrificing ratio is equal. So it will be distributed to A and B in equal ratio, which is equal to 25,000 and 25,000. Clear, guys? So the first entry will always be cash account debit to premium on goodwill. See, of course, the new partner will bring capital also. So when the new partner will bring capital, entry will be same. Cash account debit to C's capital account. C's capital account. Suppose he brings 1 lakh as capital and 50,000 towards goodwill. So we'll pass two entry. Cash account debit to C's capital account for capital, and second entry will be cash account debit to premium on goodwill, 50,000, 50,000. Now this premium on goodwill will be distributed to the sacrificing partner in their sacrificing ratio. See, note that, guys, I'm not using the word old partners. I'm using the word sacrificing partner. It is not always that the old partners, both of them will sacrifice. So whichever partner is sacrificing the shares toward the new partner, they will be getting the premium of goodwill. Clear, guys? So accounting entry is simple: cash account debit to premium on goodwill. Entry number one. The second entry will be premium on goodwill to sacrificing partners in their sacrificing ratio. Next, the same journal entry when goodwill is brought in cash but later withdrawn. See, this is nothing but a simple withdrawal entry. Whenever a partner withdraws from the business, what will be the accounting entry? Partners capital account debit to cash account. So entry will be what? Partners capital account debit. Partners capital account debit to cash account. This is the entry. The first two entry will remain the same. Cash account debit to premium on goodwill. Cash account debit to premium on goodwill. And second entry will be premium on goodwill account debit to sacrificing partner. In which ratio? In sacrificing ratio. These two entry will remain the same. So the addition is the goodwill which is distributed is now withdrawn. For withdrawal of goodwill, entry will be what? Partners capital account debit to bank account. Partners capital account debit to bank account. This whatever amount was credited here, the same amount will be debited as withdrawals. It can so happen that they don't want to withdraw the entire amount. They can withdraw the goodwill partially also. So to whatever extent they are withdrawing, entry will be partners capital account debit to cash account. Clear, guys? Okay. So we were discussing about when goodwill was brought in cash. First entry was cash account debit to premium on goodwill. Second entry was premium on goodwill account debit to sacrificing partners in their sacrificing ratio. And what happens when goodwill is not brought in cash? What happens when goodwill is not brought in cash? If goodwill is not brought in cash, see, capital he cannot deny. Whenever a new partner has to get admitted, he has to bring capital. So for introducing capital, entry will be cash account debit to C's capital account. Assuming C is the new partner, cash account debit to C's capital account. Assuming C is the new partner, this is 1 lakh and 1 lakh. This is towards capital. This is capital. This entry will remain the same. There is no change in this entry. But when he is not able to bring goodwill in cash, when he is not able to bring goodwill in cash, entry will be what? New partner's capital account debit. New partner's capital account debit to sacrificing partner. Same entry. New partner's capital account debit to sacrificing partner. Entry will be what? New partner is for what? C's capital account debit. C's capital account debit to A and to B in which ratio, guys? In sacrificing ratio. Sacrificing ratio. Okay. Entry will be what? Cash account debit to C's capital account for the amount of capital that he is bringing in. This entry will remain the same irrespective of the situation. Second is he is not able to bring goodwill in cash. When he is not able to bring goodwill in cash, but we have to do a goodwill adjustment, right? So entry will be what? New partner's capital account debit, new partner's capital account debit to sacrificing partner. If both the partners are sacrificing, it will be distributed to A and B in their sacrificing ratio. Clear? So mainly there are only two methods. First is when the partner brings goodwill in cash. Second, when the partner do not bring goodwill in cash. Clear? And in both the situations, whether the partner brings goodwill in cash, whether the partner do not bring goodwill in cash, if there is an existing goodwill in balance sheet, existing goodwill in, check the balance sheet of the old partner, which will be given in the question. Check the balance sheet of the old partners before admission. If there is a goodwill, if you see goodwill in the old balance sheet in the question will always remain silent. So what you have to do, you have to write off the goodwill. You have to write off the goodwill to the old, in the old ratio amongst the old partners. Okay, so in our example, who are the old partners? A and B. So A is capital account debit, A is capital debit, B is capital debit to what? To goodwill. And this will be in which ratio, guys? This is the goodwill of old partners in the old balance sheet. So what we will, which ratio will use? We'll use old ratio. The question will always be silent. The question will always be silent related to existing goodwill. So whether it is an admission, whether it is a retirement, you have to always see the old balance sheet. If there is a goodwill existing in the old balance sheet, write off the goodwill to the old partners in their old ratio. So let us quickly do a recap, guys. When goodwill is brought in cash, entry is cash account debit to premium on goodwill. The first entry for the introduction of capital, that will remain the same in all cases, cash account debit to C's capital account. That will remain the same. I'm talking only about goodwill now. So the accounting treatment of goodwill will be when the partner brings goodwill in cash, cash account debit to premium on goodwill. And this premium on goodwill will be distributed to the sacrificing partner in the sacrificing ratio. Accounting entry will be premium on goodwill account debit to sacrificing partners in their sacrificing ratio. Clear? Now, when the partner do not bring goodwill in cash, so we cannot pass this entry. If the partner do not bring goodwill in cash, we cannot pass this entry. The only entry that will be passed is what? New partner's capital account. New partner's capital account debit to sacrificing partner in their sacrificing ratio. This is what I was talking. New partner's capital account debit to sacrificing partner in their sacrificing ratio. And when the partner withdraws the goodwill, accounting entry will be very similar to the normal accounting entry for drawings, entry will be partner's capital account debit to cash account. And one more thing I discussed, the question will always be silent with respect to existing goodwill in the balance sheet. Just whenever you get a question on admission on retirement, see the balance sheet. And if you see a goodwill appearing in the old balance sheet, what you have to do? You have to write off the goodwill to the old partners in their old ratio. Entry will be A's capital account debit. In our case, A and B are old partners. A's capital account debit, B's capital account debit to goodwill. In which ratio, guys? It will be in old ratio. It will be in old ratio. Existing goodwill will always be written off in the old ratio, guys. Let us take. See, hidden goodwill is very easy. Assuming there are three partners, A and B. A has a capital of 1 lakh. B has a capital of 2 lakh. C is admitted for 1/5 share and brings 2 lakh as capital. 2 lakh as capital. Okay. Now for 1/5 share, he is bringing 2 lakh capital. So the total capital of the firm should be the total capital of the firm as per this calculation. The total capital of the firm should be 2 lakh into 5 by 1, which is equal to 10 lakh. Okay, this should be the total capital of the firm. Now, if I add A, B, and C also, C is how much? 2 lakh. The total capital is 1 lakh plus 2 lakh plus 2 lakh, which is equal to 5 lakh. Now, as per the calculation, it is coming 10 lakhs. But when I add A, B, and C, it is only 5 lakhs. So the difference between 10 lakh, the difference between total capital, the difference between total capital as per computation, which is equal to 10 lakh in our example, and actual capital is 1 lakh plus 2 lakh plus 2 lakh is 5 lakh. The difference will be called as goodwill. Implied goodwill will be how much? 10 lakh minus 5 lakh will be the 5 lakh will be the goodwill of the firm. Clear, guys? 5 lakh will be the goodwill of the firm. This concept is called as hidden goodwill. Clear? Now let us take an example. Okay, this we are discussing about when the A and B are partners. A and B are partners, and goodwill is C is joining, and goodwill is brought in cash. When goodwill is brought in cash, C is A and B are partner ratio is 3:2. C is admitted for 1/5 share and brings 40,000 as goodwill in cash. Sacrificing ratio is 3:2. They have given the sacrificing ratio, makes our job easy. So for account first entry will be cash account debit 40,000 to premium on goodwill, being goodwill is brought in cash. Second entry will be premium on goodwill account debit to A and B, to A and B. In which ratio, guys? If there's sacrificing ratio is 3 is to 2. 3 is to 2. So 40,000 divided the ratio of 2, 3 is to 2, it will be 24,000 and 60,000. Clear, guys? Very simple. Okay. Same entry. Now the goodwill is withdrawn. The first two entry will remain the same. Cash account debit to premium on goodwill. Premium on goodwill account debit to A and B. It remains the same. Third entry is just like a drawings entry, guys. So entry, whenever the partner withdraws from the business, entry will be partner's capital account debit to cash. So similarly here also, A is capital account debit, B is capital account debit to cash account, being goodwill withdrawn in cash. Clear? Guys? Third, goodwill not brought in cash. The partner is not bringing. When the partner is not bringing goodwill in cash, still we have to make the treatment for goodwill. Goodwill is valued at how much? 25,000 is adjusted through partner's capital account. Okay, R is admitted for 1 by share but cannot bring goodwill in cash. Goodwill, his share of goodwill. Goodwill is valued at 25,000. His share of goodwill is valued at 25,000. Is adjusted through capital account. Entry will be what? R's capital account debit. This is R's share of goodwill, not the entire firm of goodwill. This is R's share of goodwill. Okay, entry will be R's capital account debit to P and Q. In which ratio, guys? Always it is sacrificing ratio. Okay, since they are equal partners, if you calculate the sacrificing ratio will also be coming as equal. So that is why it is divided equally between P and Q. Clear? Goodwill not brought in cash and existing goodwill in balance sheet. See, I told you irrespective of the scenario, if there is an existing goodwill, and existing goodwill is how much? 40,000. Whenever there is an existing goodwill, write off the goodwill to the old partners in their old ratio. Entry will be P's capital account debit, Q's capital account debit to goodwill. In which ratio, guys? This is old ratio for existing goodwill. Old ratio for existing goodwill. Okay. And the next entry will be what? New partners capital account debit. We call it as gaining partners capital account debit to sacrificing partner also. Because new partner, the incoming partner always gains, the old partner, they will always sacrifice. So R's capital account debit, this is the new partner, or we call it as gaining partner also. We'll keep it simple for now. Entry will be new partners capital account debit to sacrificing partner, in which ratio is sacrificing ratio. And in this case, sacrificing ratio will be equal because the old profit sharing ratio is equal and no other information is given. So sacrificing ratio will also be equal, guys. Clear, guys? Okay. So let us quick do a summary of this. Goodwill is brought in cash. Entry will be cash account debit to premium on goodwill. Okay. When goodwill is next entry will be premium on goodwill account debit. When premium next entry will be premium on goodwill account debit to sacrificing partners in their sacrificing ratio. When goodwill is withdrawn, entry is partners capital account debit to cash account. That's a simple entry for withdrawal of goodwill. Goodwill not brought in cash. What is the entry? New partners capital account debit to sacrificing partner. In which ratio, guys? Sacrificing ratio. Clear, guys? That's all I wanted to discuss in treatment of goodwill. Thank you, guys. You can follow me in YouTube, in my YouTube channel, Learn Accountancy with Prasad R. In LinkedIn, my handle is Prasad Ramachandran, and my email ID is also given in the slide, guys. You can connect with me with any of the following things. Thank you, guys.